Does your loved one have a long-term care insurance policy? If so, you need to watch this video. My name is Vitali, and welcome to the In-Home Senior Care channel. So today I'm going to dive into all the details and all the nuts and bolts of what long-term care insurance is and help you to understand what you're dealing with as you think about, and maybe you figured out that your mom has one. So what is it? So it is, originally they were created and they were known as nursing home insurance. Because nursing home is not covered by Medicare, it's considered long-term care. It's basically ongoing. It's not episodes of things, it's an ongoing care. And so this day and age, it will cover the nursing home, but it will cover assisted living, memory care, and it will cover home care, which is an amazing option, as most people that we know want to age in the comfort of their own home. So most of these policies, if people have them, they've had them for 10, 15 years. And so, of course, they don't really remember what the policy actually covers, how it works, how to trigger it, and what they have available to them. So in this video, I want to cover and kind of dive into the details of how they work and how you can dig deeper and uncover your own specific situation and what you have and what's available to you. So long-term care insurance, of course, is a financial product, truly, because it's meant to help cover you in terms of the expenses that you will need down the road for the care that will be required. And let's face it, we will all need care at some point in our lives if we live long enough, right? So unless we die a catastrophic death, long-term care is going to be something that we will need. And so having a policy is a great thing because it will help protect some of your funds that you have from being spent too quickly on the care. All right, so how does the benefit work? So benefits begin with, we think about a daily or a weekly limit. Most policies will have either one. Usually it's a daily limit. So let's say it's $150, and I'm just kind of making up a number. But so it'll have what it costs or what it provides or what it covers per day. And then that will then, is your money to spend towards the care. So in most cases, most companies, home care companies, will not take assignment of benefits, which means that they will invoice you. You're going to pay their invoice, and then you will submit paperwork to the long-term care insurance, and they will be reimbursing you with funds. So it functions differently than most, like health insurance, if you think of it in that perspective, right? So the limit determines, that daily or weekly limit determines how much care you can get or how much they'll pay. And so depending on how good your policy is, you may have all the care that you're receiving covered, or it at least still covers some of it for you. Second, there's a lifetime benefit, or kind of the total, or the way I like to call it the bucket, right? The bucket of money that you have, that is your total. So let's say if it's $150 per day, let's just say 100, just for easy math. And so that's, $700 a week, or $3,000 a month. Let's say your total limit is $100,000. So it could be 100, it could be 150, 300,000. Those were all considerations you would have made while purchasing the policy, because those were the things that would have affected the premiums for the policy, right? So the bigger bucket that you get, the more coverage you're buying, the more expensive your premium is going to be. And so most people kind of look at their budget and figure that out. And so again, this is the thing that now that you're thinking about it, you're going to need to get with your mom or your dad, whoever the policy, whose ever name it's in, and actually together call the company, call the policy, and go through and the things I'll share with you, and actually get the details and figure out what it is and what you have. And then so by the end of that, you will know exactly what you've got and exactly what you're dealing with. So the total lifetime benefit is there. Basically, that's your limit. So once that is used up, the insurance stops, right? That's what you have. But you don't have access to all that amount. In other words, you can't just say, hey, just give me that $100,000. I'll just start paying for care with it. It's doled out as you're receiving care. So that's the daily and then the lifetime benefit. An important point to make is you need to find out and make sure many of these policies have an inflation rider on them. And what that means is that, I mean, simply as what you think about it. If you bought the policy 10 years ago, things were cheaper back then. Everybody talks about how, how much milk and eggs is these days and how cheap it was back then. And so an inflation rate rider means that there was, that rate that you originally, maybe you bought a policy that had a $50 per day limit. And if it's got an inflation rider on it today, that is going to be more. So it's tied to some sort of a percentage that it, rose in amount over the time that you've had the policy. So you need to find out what that is, and of course, learn what the today value or today limit, the daily limit is, so that's the real number you're working with, not the number that's going to be in the paperwork that you're looking at, because that number is going to be based on probably that original information. Next, we talk about what's known as an elimination period. And so the elimination period is a number of days that you have to pay out of pocket before the policy will actually start reimbursing you. And so the best way that I can just give you an analogy is that it's like a deductible with your car insurance. So if you have a $500 deductible with your car insurance, and so if you have a $5,000 repair bill to repair your car, you're going to owe that first $500, and then after that, the insurance covers. In this case, the elimination period is going to be in days, 30, 60, 90. Almost all the policies we see are 90 days. And keep in mind, these are care days, they're not calendar days. So if you start the care today, it doesn't mean that 3 months down the road, they start paying. So these are care days. If you're receiving care 7 days a week, that will end up being that way. But if you're receiving care, let's say 3 times a week, right, that will likely be a little bit more than a year by the time you actually satisfy the elimination period. And let me kind of just add a couple things in here. A lot of people, when they get to looking at their policies and they look at this piece of it, they forget that they have that. And so they were all excited to go ahead and trigger the policy, but then when it comes to this, they're like, oh shoot, I'm gonna have to spend all this money out of pocket. Forget it, I don't wanna do this right now. And I wanna caution you with that, because whatever bucket of money you have, whatever total lifetime benefit you have, you're potentially gonna leave a lot of that on the table if you wait and don't trigger the policy when you actually have the need, when the need's actually there. And so don't trip over that, because the second part of that is when you trigger the policy, you will no longer pay the premiums, right? So you're going to save some of that money, but you're going to spend it on the care itself to get the care triggered. So that's the elimination period. So just know that and figure out what it is. Occasionally, it pays to have a conversation. We've seen someone that maybe is diagnosed with something with something terminal, and where they have a much shorter time frame where the policy may waive the elimination period. It's worth asking, and so that's just one of those things. So then let me kind of go back to how do you trigger the policy, right? So this is kind of how does it work? But then it's not as simple as like, hey, I just want to get care, I'm just going to do this, right? So there's definitely triggers involved in getting care. And so the triggers are usually, this is what we see is what are known as ADLs, and it would be 2 or assistance needed with 2 ADLs. So ADLs are activities of daily living. And I'm going to kind of go through them and help explain them more. So they are bathing, dressing, toileting, transferring assistance, eating, and continence, right? So continence is bladder and bowel control issues. And so if a person needs help with 2 of the 6 or the 7 ADLs, that will be a trigger. Most policies, that is what's written in their language. That's the trigger for the policy, is two assistants with 2 of the 6 ADLs. Occasionally, we will see, or the policy may have what they call a cognitive trigger, meaning physically the person is maybe able to do those things, but because of dementia, Alzheimer's, they will need supervision and cueing, right? They can't really do this on their own. They need somebody to be there with them and to say, hey, it's time to get dressed, or it's time to, take a bath, and they need someone to kind of walk them through that. And so even though physically, if you were to do an assessment, they physically can actually function and do those things, but cognitively they need the support. So some of the policies will have a cognitive trigger, meaning that even though the person might be in better physical condition and not really requiring assistance, but they will need someone to supervise and assist them because of the cognition. So keep that in mind. So the way that typically this works is, let's say we get a call from a family and they're interested in care and they want to go ahead and trigger their policy. And so we will, the company is going to require a nursing assessment from us to say we've actually assessed the care receiver and they do qualify, right? They need help. They need help with at least 2. And then most of the policies, most of the companies will actually send out an independent nurse to do another one of these visits, another assessment on their own to kind of verify. It's their way of, I think, of making sure that people aren't frivolously doing this. So the point here is that you can't just say, hey, I just want to go ahead and start getting care and having this in here. There is a very specific trigger that is involved in the process to, where the care is needed. Here's a caveat. So what we see in our business is that most people actually wait too long to do this because there's maybe a resistance to getting care, and then B, they think, having the whole rainy day mentality, like, I don't want to do this yet, things could get worse, I'm still kind of okay. So the reason I want to caution you is because if you will qualify with the 2 ADLs, or if your loved one will qualify with the 2 ADLs, think about that lifetime bucket of money that they've paid for in all these years. Most of the time when we're doing this, most people never exhaust this bucket of money that they've paid for, right? This is yours now. This is something you've spent 10, 15 years paying for. It's yours, and you should get to it as soon as you can. My view of it is that you should exhaust this, and then you may still need to pay out of your own funds to continue the care, but you shouldn't pay out of your own funds and then leave this untouched and potentially have that evaporate when the person passes away. So, word to the wise, we work with a lot of families who have long-term care. We're very versed in it. We really are, good at helping you walk this process. If you would like help with it, we can come and do a care consultation, no cost, no obligation. As always, we're super local here, and we've been doing this for a long time, and we're happy to walk that with you and help you. If this has been helpful, please share, comment. Maybe you've got questions, maybe you have ideas, maybe you'd like to hear a video on another topic that's similar to this or other care topic. But subscribe and share. Thank you so much. Have a wonderful day.